JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 15th of December 2020. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, the first one I want to pick up here is Nikkei 225. Again, I'm just gonna give you a quick review because not much is happening here since yesterday, actually, well, since actually for the past kind of a few trading days. But basically the same idea remains. We need to see a clear break either above the 26,890 zone in order to get a little bit more excited with the upside, or we need to see at least a drop below the 26,405 zone right here in order to consider some downside. But at the moment we're not really getting neither of that, so yep, that's why we will take a bit of a neutral stand here and wait for the next kind of move here. Now jumping into Hong Kong's Hang Seng Index, here it's a little bit more interesting because the index is drifting lower, and if you remember last week I talked about this key support area right here between the 26,256 level and the 26,322 territory, and what I was saying that in order to aim for some lower areas I needed to see a nice good daily close below this. Yep, not only a break but also a daily close below this whole area of support. At the moment the index is doing that. However, we still have a bit of time left of trading here on the Hong Kong's Hang Seng Index. So that's why I'll be very careful here for now, and yep, I'll keep an eye on this one. If we do see a nice close below this area, then yes, further declines are possible, where the next target could be this low of the 13th of November at 25,909 zone. If it doesn't stay below this area, below this 26,256 hurdle, well, this could still result in a bit of a reversal here back to the upside, so that's why be very careful with this, guys. However, this reversal to the upside might be limited due to this downside line taken from the high of the 25th of November. So in other words, a move higher here could still be seen as a temporary correction before another possible leg of selling. Now jumping into DAX, the German index, and the index closed yesterday in the slightly in the positive territory here, or actually I wouldn't say slightly, but in the positive territory, just because it managed to open up here with a nice gap to the upside yesterday. So yeah, it kind of helped the index to remain above this short-term upside support line taken from the low of the 13th of November. Now if we look at the cash index right now and where the price is currently sitting at, we can see that the price is sitting at around 13,215 mark. So basically just fractionally above this above this upside line, and basically it's still near this key level that I kept talking about, guys, and I was mentioning this one to you in the past kind of few videos, where I was saying that keep your eyes on this 13,213 territory, because it somehow acts as a good area of support at the moment. Yes, it is doing the same thing, so we're seeing the price being fractionally above it. Let's see how this is going to open up today, but if we see another drop below this upside line, well, at the same time, this would place the price below the 21-day EMA, and maybe, yep, a further move back below this 13,163 territory could open up the kind of the gates for a further move lower here, guys, towards this psychological 13,000 territory. But again, we are at a very interesting spot here. If you're looking for some upside, then probably wait for a push back above the 13,347 territory. Now, I've mentioned briefly this level yesterday, and basically what I was saying, that this is the more of a comfortable level for me here, after a break of which I could aim for some higher levels, but at the moment we're just stuck here, so I would rather keep it kind of careful, and would rather stay a little bit on the neutral side right now, just to wait and see where this index is going to go right now, which level it will break first. Now the FTSE 100, and here you can see that the index drifted back down yesterday. Of course, that was driven mainly by the slight strength in the British pound that we saw yesterday. So on slightly positive news coming out from Europe and UK, surrounding the Brexit kind of issue. And yep, at the moment, in a way, we could see the pound, or should I say, let's put it this way: if the pound goes a little bit higher again today, then yep, the fact that we broke this upside line, yep, it could lead to some lower areas. However, as I mentioned to you guys previously when covering FTSE, I would rather actually not only wait, of course, I would rather wait for a drop below the 64 territory right here, and then aim for some lower areas, because, well, at the moment, I mean, yes, we broke this upside line, but don't forget that this upside line is a very tentative one, so that's why I don't really focus on it too much. And oh, by the way, I can see Kirsten here saying good morning to me, so good morning to you, Kirsten, too. So I hope you're enjoying your coffee, or is it tea or coffee, or, well, anyway, I hope you're enjoying your drink right now, your hot drink. Yeah, guys, but coming back to the chart here. Basically, long story short, yes, I need the fact that we broke this upside line. Great news for the sellers. However, because this upside line is a very tentative one, I would rather wait for a drop below the 64 territory in order to consider some lower areas. In terms of the upside, I would need to see a push above the high of the 10th of December here, near the 6,640 territory. Then yes, we could go for some higher levels, because such a move here, a break of this level, would confirm a forthcoming higher high. So again, keep your eyes on this one. Let's see how this is going to play out. Now, jumping into DXY. DXY is, well, yesterday it was trading lower, but again, coming back to the thing that I was talking about yesterday. Basically, yesterday, what I was saying, that the fact that we managed to break below this 90.59 territory, yes, great news, great stuff for the sellers, but we didn't really get that daily candle remaining above this, as you can see here, and this is the result we're having today. Basically, it did drift lower again, it tested this area, and it's struggling to overcome it. So that's why I'm waiting for that daily candle to stay below this area, below this 90.59 territory, because to be honest, these false breakouts are not really working well here for the sellers, and that's why we need to see that daily candle remaining below this hurdle. If it does that, then yes, further declines are possible, but if it doesn't, I'll take a neutral stand, because although yes, we are still trading below this downside line, but I'll still take a bit of a neutral stand here and wait for the index to make a move here to break this downside line. So again, for now, it's a bit of a waiting game again. Gold is pushing higher. This morning we're seeing, yep, a nice move to the upside. However, as I mentioned yesterday, as long as it stays in between these two levels, these two highlighted areas, I'm taking a neutral stand on this one because it's a little bit tricky here still. So anything could happen. And yeah, for now, like I said, I need to see a violation of at least the 1849 level here, and I would like to see actually the daily candle remaining above this area. In order to kind of aim for some higher levels. But if it struggles with this area, because don't forget that this level here, this area, this kind of 1849 level did provide very good support previously. So now it could be seen, or should I say, it still could be seen as a good area of resistance, because as you can see here, back on the 11th and on the 10th, it did the same thing here. So that's why, guys, wait for a nice good daily move here above this 1849 zone, and then we could consider some higher levels. But at the moment, I would rather stay a little bit on the careful side. Similar story with the downside here with gold. Yes, a drop below the 1818 territory could do the trick for more sellers. However, as you can see, my arrow goes from around here, from around this territory, and actually not really 1795. It should be from around this 200-day EMA, shown as the black line, because this is where the kind of the 200-day EMA is kind of balancing near this 1800 level, and a nice good drop below that psychological territory, of course. So yep, would also place the price below the 200-day EMA as well. So I mean, all this could work out nicely for the sellers. But again, at the moment, the commodity is pushing higher, so let's see how it behaves near this 1849 level. Now, jumping into Bitcoin. So Bitcoin, let's put it this way, it's trading above this little short-term tentative upside support line taken from the low of the 26th of November. Yes, okay, that's all looking quite positive. However, as you can see, the crypto is struggling with this hurdle right here, this 19,463 territory. We did get an overshoot here today, but yep, it slid back down here and remains below this hurdle. Now, if we do get another push above it, yep, great news. However, be cautious about the current highest point of December near the 19,956 territory. A nice good break above this area, of course, opens up the door towards that psychological 20,000 mark, guys. So that would be quite interesting to see if we can actually reach that area. Now, in terms of the downside, well, pretty straightforward. We need to see a drop below this upside line, and to be honest, ideally, I would also like to see a drop below the low of the 11th of December here, and actually the current lowest point of December near the 17,629 zone. So keep your eyes on that, guys, and like I said, on the upside, keep your eyes on these two levels. Jumping into the pairs, AUD and ZD. So if you remember yesterday, I talked about AUD and ZD, and last week as well I said that initially after kind of breaking this this falling wedge pattern and kind of, let's say, moving according to all the TA rules, my next target was this 200-day EMA, which, as you can see, got tested perfectly and continues to provide decent resistance. Now, what I was also saying that if we do get a push above this 200-day EMA, my next target will be this downside line taken from the high of the 18th of August, and then I'll take it from there, because I don't want to rush into anything yet, because we already had quite a decent kind of up move here, so maybe a bit of correction here could be possible. However, in terms of the downside, now we will consider the downside if we get a break of this tentative, first of all, of course, a break of this tentative, short-term tentative upside line here taken from the low of the 2nd of December, and then ideally also just to kind of provide a bit of kind of more, let's say, reassurance, I would say, a drop below the 1.0569 territory here could do the trick for more sellers, because at the same time the rate would be placed below the 21-day EMA, and maybe, yep, like I said, more bears could start running into the field here and yep, driving this one lower. So in other words, guys, we are at a very interesting spot. There is still a chance for this one to move higher. However, the upside might get limited near this downside line. But if this short-term upside line breaks and the rate falls below the 1.0569 territory right here, now that's where it could become a little bit more interesting for more sellers. USDJPY, so a bit of a messy chart here. Now, with this pair, yesterday it drifted lower here. It moved below this 103.65 territory, and that's the reason. And this is kind of the good example of the when I keep saying that wait for that daily candle, or let's say wait for the kind of the daily candle to remain either above or below a certain level. And here you can see this 103.65 level got broken, but yeah, it was just a false breakout, and the rate rushed back to the upside. So yep, I mean, it's a bit of an annoying move here. However, it is how it is. I mean, that's the market, guys. So it never does what we want it to do. So just kind of, we only can try to we can only try to speculate on this a little bit here. But either way, guys, in terms of the downside, still the same kind of outlook remains, that we're leaning a little bit more towards the downside, as long as the rate continues to balance below or trade below this 21-day EMA shown as the yellow line, because as you can see, recently it has been acting as a fantastic area of resistance. Although we kept getting these overshoots, but these were just overshoots. As you can see, the daily candle kind of was struggling to remain above this 21-day EMA. So if it continues to do so, if this 21-day EMA continues to provide resistance, then yep, we could go for the downside. However, like I said, I need that daily candle staying below this 103.65 territory in order to get a little bit more comfortable with lower areas. GBPUSD, so that's the little issue here, which is causing the FTSE to push a little bit to the downside. Now you can see that yesterday we had a fantastic rally here in GBPUSD. However, excuse me. However, what I was mentioning to you guys yesterday in my morning video, that the fact that it pushed higher, that was great. Of course, wonderful. The fact that it broke at one point this downside line taken from the high of the 4th of December, also great for the bulls. However, what I was saying as well, wait for that daily candle. And this is the reason again why. You can see that it pushed higher, it failed to stay above it, and yep, started drifting back down. However, on the positive note, yes, it stayed above the 21-day EMA, so it kind of gives a bit of hope here for the buyers. But on the other hand, it's struggling with this downside line. So for now, basically, long story short, I'm taking a neutral stand because I need to see a clearance of one of the levels. Either I need to see a drop below this 1.3287 territory in order to consider the downside. And again, the same story with the daily candle. Yep, wait, I would like to see that daily candle staying below this area, or I would like to see the daily candle staying above this 1.3413 territory, and then I could go for some higher levels. Until then, I'm neutral on this one, guys. EURUSD. So I have looked at this one a lot of times, guys, and especially last week. And basically this level here, the 126.46 territory marked by the let me just adjust this a little bit there. This way, marked by the high of the 10th of September, is still playing out. It's still providing resistance somewhat, I would say, because look, I mean, here, for example, we did get a break. We did get that daily candle staying fractionally above this hurdle, but the next daily candle failed to move to the high of this previous candle, and well, we saw a nice reversal back down. So today we're seeing another attempt of course, yesterday we saw another attempt to overcome that area, but this hurdle, but it failed to do so. Now we're seeing another attempt today. Yep, we already managed to overcome it, but let's see if this is not going to end up another false breakout. So if we do see that daily candle staying above this, yes, we'll aim for some higher levels, but we'll keep a close eye on the next daily candle, because we don't want a repetition of the same kind of story as we had here last week. So be very careful with that one. And finally, EURUSD. So guys, EURUSD, again, the same idea, guys. Not much has changed. I'm keeping an eye on this this 1.2155 territory, and in a way, for now, guys, I'm not really gonna do much. Although, yes, I am a little bit more bullish than bearish. I would say somewhat bullish, but still the same story with these kind of key resistance barriers and key support levels. Basically, we keep getting these overshoots here above this 1.2155 territory, but we're not really getting that daily candle staying above this area. So yes, another move higher was we saw another move higher today. Okay, that's good news, but we're not really getting that kind of candle staying above this area. So I need to see that daily candle staying above this 1.2155 territory, and then I will aim for some higher levels. If it doesn't, I'll stay neutral as long as the rate or as long as the pair trades above this upside line. If this upside line gets broken, now that's where it could become maybe a little bit more interesting for more sellers. So that's it, guys, for this session. I'll have to wrap it up here. I hope you found it useful. Thank you very much for joining in, guys. I really appreciate your time. And if you want to catch my video later on, my traders tea time is always 14:15 GMT. For now, I hope you have a fantastic trading day, guys. Stay safe, don't overtrade, and always have your stop loss in place, and everything will be fine. So have a wonderful day, and I'll see you later. Thank you very much, and bye-bye.